All right, we have a good video on our hands today, folks. I'm Nick Fenton. I'm with Likefolio. I'm the in-house options expert, and I'm going to be the one talking to you today. We're looking at the Thinkorswim desktop trading platform. This is brought to you by TD Ameritrade, the only place you can get Thinkorswim access, the only place you can get access to social sentiment, the only place that you should have an account if you're an options trader like me. I'm telling you, it's the best one. Don't hesitate. Sign up now if you don't already have an account. We're going to be giving you a bit of an offer at the end of this video, so stay tuned. So refresh. How do you get social sentiment on your chart? You go up here to Style when you're in the charts. You go to Settings, Equities tab, and Show Social Sentiment. Make sure that's checked. One other thing we want to add here. We want to go up to Studies, Add Study, Volatility Studies, and we're going to add Implied Volatility. So this is just going to give us this lower chart that is going to basically chart the volatility movement throughout the past 52 weeks or whatever chart period you're looking at. In this case, we're looking at a 1-year daily chart of target. So it's going to show us the 52-week movements of implied volatility in target. So when selling puts and selling call spreads, you really want to be selling when it's an advantageous time to sell premium. The way that you determine that is with this implied volatility. So let's put some shine on that. The first thing I like to look at is, what is the very top end of the implied volatility range and what's the very bottom end. So top end, we've got right here in this oval about 45%. Bottom end, we've got about 17-18%, somewhere in that range. Those are our extremes. Now we saw it pop up there twice, but as you can see, they were just real quick pops. There's no real sustainability at that level. I'd say it's a little more sustainable right here around this 30% range. We saw it get up towards that level several times. So I think this is kind of more along the lines of the top end of the range. From a more common perspective. Now, does it have potential to go all the way up to that 45 level? Of course, it's done it twice. But more often than not, it pulls back from around the 30% range. Currently, we're right here at 28%. So we're right at the top end of this, of the more, the more probabilistic pullback point. So I think this is a very advantageous time to be selling premium. Again, the risk is that it does pop back up to 45 or higher. But I'm willing to take that risk because it tends to pull back from the levels where it currently is. So I like the idea of selling premium. We've established that. So we're looking at premium selling strategies, credit strategies where we're obtaining a credit for selling options. Next, we want to take a look at the price chart. So let's put some shine on the price chart. Here we are looking at TGT 1-year daily bars chart. I'm going to pull out the trend line tool. First thing that jumps way out at me is that we have a lot of support right around this level here. Again, we don't want to look at precise price points as our support level, just general areas. So the area around here was support. The area around here was support. We're back in that area where we tend to see some price support, some people stepping in and buying. So I really like this opportunity to step into support and potentially see a move to the upside here in target. One risk that jumps out at me is we have earnings on the 16th. So that's not, that's not far. That's 2 weeks. So earnings in 2 weeks, there's definitely needs to be taken into consideration as a risk component of this trade. So all in all, we've established that selling premium is the best thing to do in this scenario. We have a really nice support level, so we probably want to position bullish in our short premium strategy. But we want to take into account that earnings are coming up in 2 weeks, so maybe we size down a bit. Don't put our typical size on. Cut the size in half or even more. Just to kind of eliminate some of that risk. We do want to participate in the trade, but we want to make sure that we know earnings is coming up, so we want to size down because that risk is there. Now let's take a look at social sentiment. Does it support a bullish position? Well, when I look at this social sentiment, I don't necessarily see incredibly bullish information. The first thing we're looking at here is the sentiment area, this orange line graph that kind of moves all over the place. But we want to smooth that out. What we really have seen here when we smooth it out is just a pretty sideways motion here. But recently, you can argue that we had actually you can't argue it. It's definite that we had some downside pressure in sentiment there. That was very bearish. What you can argue is that downside pressure is pretty much over. We've seen it stabilize. There's no real threat showing here of continued downside momentum in that sentiment. So we've seen stabilization there in sentiment, which doesn't necessarily support a bullish case, but it also doesn't say that we should worry much about potentially continued downside pressure. So it could give validity to the safety of positioning bullish here. One other thing to mention is there was certainly this downside trending in this positive mentions here. You can see the positive mentions just kind of scaling down, but that too has flattened out. And as of late, it almost has a little bit of a bullish tilt to it. So I think you could say there's a little bit of bullishness in these positive mentions at best. At worst, it's neutral. And then we can say that's neutral here in the sentiment reading. So it's not necessarily screaming bullish, but it's certainly not telling us we should be aware of anything bearish. So it's not extremely supportive of our bullish case, but the price support area is supportive. And the fact that this isn't telling us alarmingly bearish things, it's telling us, if anything, very, very, very modest bullish signaling. I'm pretty comfortable. So I'm going to position bullish in TGT. First, we're going to take a look at selling puts, just naked. Then we're going to take a look at what that looks like when we give ourselves a little bit of protection via buying a put below. Via selling a call spread. Sorry. So we're looking at the chart tab now. Let's go over here to the trade tab. All right. So first, when selling puts, we want to determine our duration range. I like selling selling things that have between 40 and 70 days left until expiration. So this December 16 is perfect. We got 44 days left until expiration. We've got the one that's a little bit further out is 79 days. That's too much duration. This one here has 37 days, which is pretty close to the 40-day minimum, but it's a weekly. I prefer standard monthly options. The weeklies just aren't quite as liquid. So you'll see wider bid-ask spreads. You won't see as much volume. You won't see as much open interest. Here's our volume. Here's our open interest. Here's our bid-ask spread, 24. So we've got a 3-cent bid-ask spread right here. 253 volume, 1170 on the open interest. That's solid. If we go here and look at the weeklies, you can see we've got a 9-cent bid-ask spread instead of a 3-cent. 0 volume, 0 open interest. So obviously this one is killing the weekly with regard to liquidity. All right, so how do you choose the put you want to sell? I generally like to get somewhere between 25 and 30% on my probability in the money here. Now, if you don't have probability in the money showing on your layout, you simply go up here to layout, you go to customize, you find probability in the money by scrolling down over here. There it is right there, and then you would just double click, or you could click add items. But this is the set that I like in this order: volume, open interest, probability in the money. That's the set that I like, so I would encourage you to copy that set if you're going to get serious about trading options, or if you're already serious about trading options. Those are the three main components that I like to see. I want to see how liquidity, first and foremost, which volume and open interest shows me. And then I want to see the probabilities of it being in the money. Some people like out of the money, some people like touch. I prefer probability in the money. So, we like the one between 25 and 30. We've got one here, the 65 is at 36.7%, and then we've got the 62.5 at 23.96. This 23.96 is much closer to my preference range of 25 to 30. So I'm going to go with the 62.5 put. We're selling these puts, so we would want to click the bid, not the ask. Ask would be buying. Bid is selling. So we're going to sell these puts. You see we sell them for 83 cents. It's showing us that we're doing a single spread. We're selling. I'm going to change this to 1. Just get a 1 lot in there. The symbol's TGT. Here's our expiration day. Here's our strike, 62.5. We're selling puts. The price is 83 cents. The limit, it's a limit order. It's a day order, and we're going to route it through the best exchange, which essentially you can route it through individual exchanges, but just let the software route it through what it determines as the best exchange. We can click here, confirm and send. It's going to reiterate our trade here. It's going to tell us the break even. It's going to tell us the max profit, max loss if the trade goes, or if the stock goes down to 0. So if target was to just completely fall out of bed and go bankrupt in the next 40 days, which of course is not going to happen, then you would lose $6,100. So this is not a very good representation of the true risk in the trade. Then it tells you your cost of commission, $1.50. So your overall credit on the trade is $81.50 when you determine or when you factor in the commission. Gives you your buying power effect and some other information that's good to review. Let's close that out. Go back here to the order entry screen, right click, analyze trade. That's going to take us to our risk profile in our analyze tab. So it moved us over to the analyze tab from the trade tab. Make sure that you have risk profile selected. It might be auto selected on probability analysis or add simulated trade. Just make sure you have risk profile selected. And I'm going to give a little bit more space to our actual risk profile here while still being able to see the trade at the bottom. So here is a picture of what the trade looks like. It gives us a visual. Our y-axis is the profit loss on the trade. So here's 0, that's break even. So our break even line goes horizontal across this graph here. Anything above the break even line is profit. Anything below the break even line is capital loss. And then our x-axis is just the price of whatever underlying we're looking at. In this case, we're looking at TGT, target. So we've got the different variety of prices here in target. I'm going to move this over a bit here. So you can manipulate the chart by left-clicking, holding, and moving left and right inside the chart. Or you can left-click and hold on the x-axis numbers to shrink it. If you slide left, and then you left-click and hold and slide right, it's going to expand it. So you can play with it. First thing I like to do is I like to go down here to Show Actions menu, left-click, Set Slices, Break Even, and choose the settlement date of the options I'm looking at. In this case, the settlement date's 12/17/16. That moves our slice, which is this vertical dotted line here, moves it right onto the break even. So here's our break even, that red slice right there. So anything to the right of that break even is going to be a profit zone until it plateaus out into our max profit. Anything to the left of that break even is going to be a loss, and as you can see, the losses just keep going and going and going. Up here is our probability of success on the trade. So we have about an 80% probability of profiting on this trade. And here's our probability of losing on the trade. So we have about a 20% probability of losing on the trade. So if you're asking yourself, why would you want to cap your gains while at the same time having unlimited losses, or unlimited down to 0? So much bigger loss potential versus your gain potential. Well, the reason is because you're doing that because you have an 80% probability of this being a successful trade. So it's all about risk, reward, and probability. The higher the probability of success, the more you're going to have to risk in order to get that reward. So here we're looking at a situation where we have a break even of 61.67 approximately. If we go back to the Show Actions menu and we go to Slices to Charts and click the top left square, that's going to put the slice on our chart. As you can see, I couldn't even see it, so I'm going over here and I am left click and holding on the y-axis over here, and I'm sliding my mouse down to make this break even visible. So there it is. There's the break even. As you can see, that's well below the support line that we had mentioned here. Well below the support area, well below the 52-week low. I mean, we're talking about a serious situation. If we back all the way to a 3-year chart, you can see here that it hasn't been back towards these levels since October of 2014. So, we've got a pretty nice scenario going on here. And one other observation I'm making after, as I'm looking at this chart is this level is actually a pretty good support level there. Then it broke, became a really strong resistance level for target. Multiple resistance touches right at this level. Finally broke back through it. So in the event it does happen to go down here and test this level for some reason, maybe earnings pushes it down towards that level, there's a good chance that resistance is going to be really strong. Previous resistance is going to be really strong support now. So now I actually like this trade even more after zooming out to the 3-year chart. This is a solid trade. So that's what we look like here as far as selling puts. So what if you're looking at this and you're saying to yourself, I really hate that there's, the losses just keep going and going and going. What can I do to prevent that from happening and to, cap my losses off? Well, the answer to that question is you can sell a put spread. And let's show you how to do that. So you go back to the trade tab. So we had chosen the 62.5 strike when we sold our naked put because it was the closest one to the preferred 25 to 30% probability in the money range. Well, you have to get a little closer to the money when you're selling a put spread. I prefer to be somewhere in the 40-45% probability in the money range. In this case, we have a 51 and we have a 36. The 36 is going to be much closer to the range of 40-45. So let's go ahead and choose the 65 as our short strike. So you would left click on the 65 strike bid because we're going to be selling that one. So left click the bid, and here you have a choice of how wide you want to make the spread. Do you want to make it 2.5 points wide? In that case, you would be buying the 62.5. The difference between 62.5 and 65 is 2.5, so that's why you have the 2.5 wide. Or you can do a 5 wide, which would be the difference between 60 and 65. So you would buy the 60. You can go wider than that. You can do a 10 wide and do the 55. But let's just stick with a 5 wide here. So we want to buy the 60 put. So we're going to hold the control key. We're going to left click the ask on the 60 put. Now we come down here, and this is automatically recognized that it's a vertical. So we're going to be selling to open. I'm going to change this to one lot. Selling to open one vertical in TGT. It's comprised of selling the 65 put and buying the 60 put. The price here is 96-cent credit. We've got a limit order, day order. We're going to route it through the best exchange. Now let's take a look at what this looks like on the risk profile. So right click, analyze trade. First, we want to make sure that we uncheck. So we've got both the trades down here, so we can do a comparative analysis. First, we want to uncheck the naked put. Keep in mind that this slice here represents the break even on the naked put. Well, here's the break even on the put spread. So what you can see here is you have nowhere near the amount of cushion. Here is our max profit, so it's capped off here at the price point of around 95 bucks. Starts losing a little bit of money as we move towards the break even. When we go below the break even, we actually start taking an actual loss on the trade. But unlike the naked puts, this loss doesn't just keep going and going and going. It has a bottom. So you can't lose any more than this $405 right here. So essentially you're risking $405 to make 95. So risking 400 to make 100, risking 4 to make 1. The probability of success on this particular trade can be determined once we move the slice to break even. So just a reminder, the probability of success on our naked put was 80% roughly. Now let's see what it is when we set slices to break even. We choose our settlement date of 12/17/16. It's going to move that slice over to the break even that represents this put spread. And you can see our probability of success is 68.5%. So we've seen a pretty dramatic reduction in probability of success, but it's still a good probability. Let's see what this looks like on the chart. Set slices to chart. Let's choose that top left square. And here's our line. So our break-even line is still well below the support line that we had mentioned. So you get these options, and that's the beauty of options. Options give you options. It's the only instruments that allow you to modify your probability of success. So in this particular instance, we have the choice of 68% probability of success, or if we uncheck that and we recheck the naked put and we set the slices to break even, we have our 80% probability. So do we want a 68% probability of success, or do we want an 80% probability of success? Do we want our break even to be a little bit closer to the support line we drew on the chart here, or do we want our break even to be significantly lower and allow this previous resistance turn support to come into play? So this is a good example of how you can utilize social sentiment, implied volatility, and overall price action to determine that you have a good opportunity to sell puts or sell a put spread, and then how you can analyze and do a comparative analysis between the two strategies in order to determine which one of those two strategies you prefer and which one you want to actually pursue. That'll do it for this video. Hope you enjoyed. Special pro tip alert. Visit learn.likefolio.com. We've got more Likefolio Trade School videos, all exciting, jam-packed with education, beneficial, actionable, awesome. Also going to have a special brokerage offer for you, so make sure you visit.